Why do rich people keep a good portion of their wealth in cash? Two reasons. One, being able to access any opportunity that presents itself. If you think about it, the deal of your dreams is in front of you, and you don't have the money to take advantage of it. That would suck. This is why rich people save cash. Two, they can get higher returns from cash deals. Not only do people offer better pricing for cash, but you can also lend money at high interest rates. This practice is called peer-to-peer lending. If you're low on income and willing to take the risk, there are plenty of platforms out there that offer peer-to-peer lending services. Essentially, you lend people your money, and they pay you back with interest. The average bank offers under 1% interest on your deposit, while peer-to-peer lending fluctuates from 7% to as high as 10%. But keep in mind, if something is too good to be true, it probably is. Maintain a rational mind whenever investing. Number 2, real estate. This is a big one. We personally love real estate. Why? Once again, two reasons. One, rent payments. Money is coming in every single month with minimal work. If you're a bit smart, you can take advantage of technology improvements happening right now and do short-term rentals for higher yields. But it isn't as passive. 2, appreciation. Population numbers are going up, and more people need a place to live or rent. Demand is increasing, so prices for properties are constantly going up, and they forever will, making real estate one of the best investments you could possibly make. Number 3, bonds. When governments or businesses might be in need of some cash, they can issue bonds which are sold to interested investors. Through these bonds, the government or business vows to pay the person buying the bond a certain amount of money every month. Generally, bonds have an expiry date on them from 1 month to 30 years. These are super safe investments because they're mostly backed by the government. As you probably know by now, low risk in business translates to low reward. Bonds are usually in the 2 to 3% yearly return range, which is better than what most banks offer but not high enough to get a beginner investor excited. Number 4, stocks. Now, stocks are not as complicated as all those Wall Street films make you believe. Stocks are an easy way for you to own a percentage of a publicly traded business. So, if a business issues 1 million shares and you own 10,000 of those shares, you're a 1% owner in that business. This incredible breakthrough in financial instruments has allowed the average person to own a stake in some of the most lucrative companies of our day with very low entry barriers. Number 5, mutual and index funds. If stocks allow you to purchase shares in a company one by one, mutual and index funds bring multiple companies together, so you're buying into an entire basket of companies as a whole. Why is this better? Well, you're more diversified, so it's a safer investment. Statistically, index funds are one of the best performing asset classes. The 5 most popular index funds are Fidelity Zero Large Cap Index, Vanguard S&P 500 ETF, SPDR S&P 500 ETF Trust, iShares Core S&P 500 ETF, and Schwab S&P 500 Index Fund. Number 6, equipment. Anything that generates money for you or helps you make money faster is considered an asset. If you're a farmer, a tractor is an asset. If you're a programmer, that laptop is an asset. If you're an Uber driver, your car is an asset. Whether or not something is an asset or a liability changes depending on if it has a direct correlation to the money you are generating. So unless your income is directly dependent on the car, buying a new one is a liability. People often confuse the two, trying to justify it as an asset when in reality, they're mismanaging their finances due to a lack of self-control. Number 7, patents. Patents are awesome. For those of you unfamiliar with the term, when you invent something new, you can protect that invention by filing a patent. It's a document that certifies you as an inventor and describes in detail what your invention does. With this protection in place, companies have to pay you money in order to use your invention. If they don't, you get to sue them. Patents are incredibly powerful and valuable in the business world. A single patent can make you rich, and all the best inventions are backed by patents. Number 8, trademarks. If patents protect your invention, trademarks protect your symbols, words, or phrases. It's pretty obvious why this is a big deal when it comes to the logo or the name of a brand. But here's where things get super interesting. If you own a valuable trademark that has marketable value, you can license it to people to use it for commercial purposes, and they have to pay you in return. Our all-time favorite is the story of Michael Buffer, who trademarked the catchphrase, "Let's get ready to rumble." Since trademarking it, he's made over $400 million just from that one catchphrase. Trademarks can be local or international, but good luck enforcing them. Number 9, brand and goodwill. There are subtle differences between brand and goodwill, but both are very valuable to any business. A brand is the footprint a company leaves in the minds of its consumers, what they stand for and how they present themselves. Goodwill is the emotional affection people have toward the brand. A brand is owned. It's an effort the company makes to push a particular image of itself into the marketplace. Goodwill comes from the way the company treats its customers, the positive impact it has on the community, and how grateful people are that the company exists. Number 10, people. You don't realize just how valuable an asset people are until they leave. Companies aren't actually real. They are figments of imagination validated by the state, names, ideas, and the innovation happening under this imaginary umbrella. Who comes up with all of these? It's the people in that company. A single person can shift a company with their ideas. Look at the impact replacing Steve Jobs with the former Pepsi CEO had on Apple, nearly bankrupting what is today probably the most loved technology brand. Their lead product designer, Johnny Ive, designed the products that are now in the hands of billions. Then there are the teams that make the company as a whole. Bigger companies often acquire startups just to bring those people in-house. It's called acqui-hire. Hire the right people and they'll make you rich. Ideally, nobody in your company should be irreplaceable, but the harder someone is to replace within an organization, the more valuable an asset they become. And there you have it, 10 assets that are making people richer. Now it's your turn to take action. Which of these assets will you start investing in today? Let us know in the comments below.